So this next person, single weekly, one withholding allowance, income of $590. So I've got to find the single weekly table. Well, that was back up there at the very beginning. Back up there on page 38. That's where the single weekly table began. And again, this person has one withholding, so I'm wanting that second column, which is under one withholding. And this person, it's $590 was their salary. So I want to go until I find $590, and it actually ends up being the very last thing on that table. $590 to $600, second column. The number that I see there is 64. So this person's withholding will be 64. The next person is also single weekly, but they're claiming 3 withholding allowances and made $675. So I can use the same table. I can use single weekly, but it's a different column. It's the 4th column for 3 withholding allowances, and this person made $675. Well, that's going to go off the first table all the way over to the second table. $675 is right here between $670 and $680, and all the way over to the 3rd column, or the 4th column, which is for 3 withholding allowances, and the amount that I see there is 54. So that means for this person, 54. The next one is married monthly, 6 withholding allowances, $4,090. So I've got to find the tables for married monthly. And basically, in order to find that, I just have to keep scrolling until I find married monthly. So you see the downside to using this method. Now when I finally get down here to the married monthly table, there's single monthly. Finally here on page 52 I find married monthly. Now this person's claiming 6 allowances. So I've got to go all the way over here to the 6th column. And their income was $4,090. Well, that looks like it's going to go off this particular table and on down to the next one. I'm looking for $4,090. So it's right about there because it's in between $4,080 and $4,120. And all the way over to the 6th column, the number that I see there, 156. So for this person, 156. The next person is also married monthly, 2 withholdings, $2,730 as the income. So I can stick with the same table here, married monthly. It is 2 withholding allowances, but it's $2,730. So where will I find that? Well, on down here, $2,730. That is in between $2,720 and $2,760. And in that column for 2 withholding allowances, the number that I see there is 143. So for this person, 143. The next person is married semi-monthly, 8 withholding allowances, salary of $955. So I'm looking for married semi-monthly. Well, I know that I passed that up as I was scrolling down through there. So basically I just have to back up until I can find that particular table. So for this person, it is going to be married semi-monthly table all the way over to the 8 column for 8 withholding allowances. Their income $955. So I follow this down until I find $955. It's in this area right here between $940 and $960. And look at this, 0. So that actually means this person will have nothing withheld from their pay. The next person is single daily. 1 withholding allowance, $96 salary. So I've got to find the table for single and daily. It's probably going to be somewhere here near the bottom because I haven't seen that table yet as I've scrolled through here, and right here it is. On page 54, single daily. And it is 1 withholding allowance and $96. So if I go all the way down here to 96, the number that I see there is 9. So that means we will withhold $9 for that person on their federal income tax. Now I get down to the next person. They are single, semi-monthly, 4 withholdings, salary 2016. So I've got to find the table for single, semi-monthly. I know that was back up here, so I'm going to have to back up to find that. Single, semi-monthly. So here's the table for single, semi-monthly. The person is claiming 4 withholding allowances. Their pay, their salary, 2016. And now I see a problem, because notice the table for single semi-monthly, it only goes up to 2,140. So I've gone off the charts. I've gone over the table. Well, remember I said whenever you have too much money, that means you can't use this method. So that means we actually will have to back up and solve this one using our previous method, which was percentage method. So that means for the time being, I'm going to skip that one and come back to it. Then I have this last person, married monthly, 4 withholdings, 3,215. So I'm looking for the married monthly table. And again, the downside is we have to scroll through until we find that table. But this one starts on page 52, married monthly. 4 withholding allowances, so I'm in the column for 4 withholding allowances. And the amount is 3,215. So that takes me all the way down here to this area. And in this area, between 3,200 and 3,240, I see a number there, 128. So for this person, it's going to be 128. So that completes everybody that I could calculate using wage bracket method. But remember, I've got that one last person left that went off the charts. So to do that person's taxes, I'm actually going to have to go back and use the method I used on the first part of the problem, which is percentage. So that means to do that, I'm going to have to go back all the way up to where I started at the very beginning on page 35, where I had my table for withholding allowances. Now this particular person is single, 4 withholdings, semi-monthly. So what did this person have as a withholding allowance? Well, their withholding allowance would be for a semi-monthly taxpayer. So according to this table, semi-monthly, the third line, $158.33. That would be the amount for one withholding allowance. But this person's claiming 4 allowances. So I want $158.33 times 4 withholding allowances to get the total withholding, which is $633.32. Now I'm going to have to deduct that from their salary. So 2016 minus that amount leaves me with $1,976.68. That's the excess. Remember, this is more like the first method that I was doing up here, because this person went off the charts. So now I can go over here and actually calculate this person's percentage method. So this person is single and semi-monthly. So I've got to find the right percentage table for single, semi-monthly. Well, table 3 is for semi-monthly, singles on the left side. So on table 3A, I'm looking for $1,976.68. Where is that? Well, I've got to find where that is on the table, because I want to make sure that I use the proper amount. And remember, what is their pay period? Semi-monthly and single. So it is the table 3 semi-monthly. That side is the side for single. So what I have there under semi-monthly single, I'm looking for $1,976.68. So if I follow that across, that's in between $1,564 and $3,658. That's the interval. So it's $202.85 and 25% of the amount over $1,563. So I'll say $1,976.68 from that, I want to deduct $1,563. That gives me the excess. The percentage was 25. Well, that's 0.25 as a decimal. I'll multiply that by 0.25. And then I have to tack on the extra $202.85. So these two amounts added together, that would be $306.27. And then I'll go back and delete all my extra work that I did there to clean this up a bit. So ultimately, this person will have $306.27 withheld for federal taxes. But that's according to the percentage method. And I had to use that because this person went off the charts. So that completes example 3. And like I said, you're going to do a problem very similar to this for homework. And you can watch this video as many times as you need, to help you get the process down. But the key is just look at your tables, look at the marital status, look at the pay period, and make sure you're looking in the proper area, because that makes all the difference when you're having to do these types of calculations.